Home builders are slashing prices, guys. They are cutting prices fast. And we know why this is happening, guys, right? We know interest rates are so high that individuals have decided, you know what? I'm not going to jump into this housing market. Welcome to my channel, guys. My name is Orlando, and we're gonna jump right into this because this is something that home builders said that would never happen. Inventory is so low that there's no way that people could stop buying houses. It doesn't matter if interest rates got to 15%. People need houses and they will continue to buy. No, it's not happening anymore. And these guys are having an issue with it. So let's jump into it. It says Lennar starts cutting prices in cooling US housing market. Now, Lennar is a big home builder. Lennar Corp has started trimming prices and offering buyer incentives in some areas of the US to bolster sales in a cooling housing market. I thought this would never happen, right? We have seen many of stories where we've seen individuals say there is no way home builders will offer any type of incentives. There is no way home builders will cut prices. Well, we see it right here. It says rapidly rising mortgage rates and economy headwinds have depressed new orders and buyer traffic in June and increased deal cancellation. The builder said on a call with analysts on Tuesday. Is that any surprise, guys? You cannot lock in the interest rate until you get to the very end of it, guys. Until you get to the very, you cannot lock it up then. So individuals that are in new construction are like, I'm gonna be stuck in an 8 to 10% mortgage interest rate? No way. You know what? You guys can have this. I'm gonna cancel my contract. I'll lose the deposit. I don't want any parts of this. Then you have people coming into the market saying, I don't want to buy a new construction and get stuck in this a year to year and a half waiting period. Who knows where interest rates will be when I get done with the home? They don't want any parts of that. For now, Lennar is sticking to its earlier forecast of deliveries about 68,000 homes in its full physical year. The catch is this, demand now is starting to wane. It's basically a guessing game. An executive said that basically he warned about a slowdown already underway, calling it a complicated moment in the market. Shares of the Miami-based builder rose after it beat expectation orders and profit margins in the quarter. And they are going to continue, guys, to get beat over the head. This is what I'm talking about, guys. And this is the reason why it's important to get this information, especially for the 85% of you guys who aren't subscribed to this channel. Why haven't you subscribed to this channel yet? I'm gonna need you to go ahead and hit that subscribe button and join the community, guys. I really appreciate all of you. But this is the reason why this information is so important, because this is the information that will allow you to understand if you should get into the market, if you should stay in the market, if you should sell, if you should refinance. You could possibly make a bad decision if you miss some of this information I'm talking about. Home builders continue to know that they're going to have a very tough time in this market. Rates are going to increase continuously. We have 3 more rate increases, guys, and they are going to continue to raise it. I'm thinking 50 basis points, if not 75 basis points. We are going to get very close to double digits before inflation goes down. So we have to be prepared for this, and it is a patience game. Lennar reported that purchase contracts for the 3 months through May rose 4% from a year earlier. The gross margin of homes jumped from 29.5% to 26%. Home builders are facing rough seas ahead with mortgage rates that have soared at its fastest rate in more than 50 years by Freddie Mac. In efforts to tamper down inflation, it is managing to cool the overheated housing market. But Lennar says that it is well positioned to maintain sales in many regions. Well, that's because they're going to be cutting prices. They're going to be giving you these crazy incentives to continue to buy these homes. Now, this is the thing you have to understand. When rates continue to increase, by the time they get done with your home, where will interest rates be? Will you be stuck in an 8% 30-year mortgage? Will you be stuck in that? Do you want to be stuck in that? Do you want them to cut prices by 20, 30%, but still have a high mortgage because you're paying 8, 9% on a 30-year mortgage?
It's trash.
I don't know if you want to be stuck in that. It's going to continue to be overpriced anyway. In my opinion, we all know this market is overvalued. Property mortgages are continuously high, gas, food, everything's high on top of you paying a really high mortgage. That may not be the best idea for most people, but I want to show you guys this is so important, guys. I want you to look at where we were 5 months ago, what everybody was saying 5 months ago, and take a look at this. This is very, very, very important for you guys to see where we were 5 months ago and what everyone was saying and what everybody is saying now. Okay, take a look at this. You don't have to take my word for it. Here is the evidence.
Basically, the lack of supply is the key reason why the market will continue to outperform. At what point do the stocks acknowledge that?
Well, it's been happening gradually. You know, it's certainly something that I think continues to surprise people. You know, like for the 18 months now, we've really heard people, you know, raise one concern after the other as to why housing's not going to do well. At this point, I believe most people believe that it's a very bad time to buy a house.
Well, yeah, of course. This was 5 months ago where he is saying that everybody is thinking that this is a bad time to buy a house. But you know where this interview is going. He's saying everybody else thinks that it's a bad time to buy a house, but he thinks this is a great time to buy a house.
That's true.
And remember, this is on CNBC, guys. And I want you to pay attention to a little thing I'm going to point out here.
I think that is by far and away consensus. And what I would tell you is that when no one thinks it's a good time to buy a house, you don't have a housing bubble, right? And so what's going to happen is that
you see this, guys? I want you to take a look at this. It says here, Lennar stock price is $103.22. This was 5 months ago, guys. 5 months ago, Lennar had a stock price of $103.22. They were in the green. They were doing great. Everybody was just, you know, low mortgage rates. Everybody just, the demand was so high. Everybody was eating great on the hog then. Just living great. Before we go ahead and finish it, let's go ahead and finish up and listen to what he's had to say. But just pay attention to the 103 stock price.
we're going to have this group climb the wall of worry. Home prices are not going to roll over. They're going to actually continue to move up because of this crushing lack of supply. And I would also tell you that, you know, you mentioned rates, and that's certainly very important. And rising rates is obviously not good for housing. But I would say from the fundamental side, remember that home buying right now is need-based. The demand for housing is motivated by need, not greed.
Okay, so he is saying that
there's no way the housing market is going to go down. There's no way that we're gonna have a market that where the prices get cut and all that other stuff.
But he's saying because everybody needs a home. Everybody needs a home. And even though interest rates are, you know, important, they're not, you know, a demanding factor of a reason why someone would buy a home, right? I mean, you know, 10%, you know, all of a sudden the need isn't that important to buy a home, right? You know, that's the way I look at it. If you can't finance this, and majority of people finance homes, if interest rates go so high, 10, 8, we're at almost at 7% right now. They get that high. No one is interested in buying a home. It's too expensive. It's an affordability issue at that point, with houses being overpriced on top of that. But, you know, if you listen to the CNBC guy, he tells you interest rates, don't worry about it. This was 5 months ago, though. It's quite interesting. But let's continue. Let's see what Stephen says about if interest rates will affect the housing market.
And Stephen, finally, when we look at, when we look across for the performance and wonder about the impact of mortgage rates, 3.5%, is that A, going to lower home prices, or B, going to keep anybody on the sidelines? Or do they just have to, as you say, buy because they have to?
You know, I think we're in an environment here where affordability is starting off very, very healthy. We do not have an affordability problem at this time. All the metrics on first-time home buyer metrics for DTIs, debt to incomes, FICO scores, loan to values, they're all very, very healthy right now. If mortgage rates rise like 100 basis points or something, well, obviously affordability will become stretched. But we think that you're going to continue to see people make that stretch because, again, their demand is need-based. and they're looking to start families. You have the millennials that are in their 30s. Motherhood is going to become very much a factor, we think, here over the course of the next several years. And when people have that first baby show up, they tend to want to look to buy a house.
Yeah.
Once again, we have to give Stephen a break here. It was 5 months ago. But what's so weird about this is that he says if interest rates are raised 100 basis points. Well, we already knew that that was going to happen in November, 2-3 months before this interview even came out. The Fed said they were going to do 5-6 increases. So thinking that the Fed was only going to increase, rates by 100 basis points, it's crazy. That's nuts. So why would you think that? But either way, what's important, guys, here is this is the information I want you to see. Look at Lanier's stock price at 103. This is their stock price right now. Their stock price right now is $65.65. This is the reason why Lanier is getting crushed and home builders are getting crushed from both sides. They're losing money and the value of their company is getting crushed from the stock price going down. And then on top of that, you have individuals deciding not to purchase homes because interest rates are so high. So they are forced to give incentives. They are forced to cut prices if they want to continue to still be in business. If not, they will go bankrupt. They will be in bankruptcy and will have to restructure and all this other stuff. They have to cut prices because at some point it's better to cut prices and make a sell than it is to not sell anything at all. And this is the information that I want to give you guys where you can see, contrary to where we were 5 months ago and where we are now, the reason why home builders are in trouble. And it has nothing to do with low inventory and all this other stuff. They are getting beat on both ends, guys. So hopefully you got value out of this content, guys. I need you to check this video out here. It will help you understand this crazy housing market and also get into your first rental property. Also check in the description below. I have membership program and useful links to get free credit reports and whatnot. I'll see you guys in the next one. Thanks.